Hello traders, Gary Wagner here. Just about 11 o'clock straight up in Honolulu, 4 o'clock in New York. That means equities markets are settling on the day, and they have been a roller coaster ride to say the least. Of course, equity markets under tremendous pressure over the last couple of trading days. Today, we have seen it range to 100 plus points higher and dramatically lower on the day, only to close in essence unchanged. As you can see, 16,019.58 puts it down 7.33 points on the day. High 16,136. So we've seen it trade about 100 points higher on the day. Low on the day is 15,888. So we've seen it trade over 100 points lower on the day. So when we take a look at our daily chart, and as I said, we're trading roughly at 16,020 right now. Let's go ahead and pull that up. What you get is a star, a small-bodied candle. It could form into a three-river morning star. That would be one of the patterns that we look at like this. But I think that we are at a very, very critical area in terms of the marketplace itself. And the numbers are best illustrated by looking at the S&P. S&P, and this, of course, is the E-mini. And so when we look at this chart, a couple of things really stand out. The first thing that stands out is when we take a look at not these lows that came in on the August meltdown and subsequent rally, but settlement prices, meaning the market opens up here, closes here, opens and closes, but you've got the open and the close right in this area. Same thing with these candles right in here. You've got that. And so when we draw it across, we're looking at about 1875. And so ever since this market has been under pressure, my question was whether or not we would see the market hold and find support at 1832 or at this 1880. Obviously, we hit that intraday low that was below this particular price point. We came up and we found some real resistance at around 1938, and that's quite evident by this top right in here. And now the market has drifted and drifted back below this, what I believe to be a pretty critical price point at 1880, because this could well become a ceiling rather than a floor, so to speak. And this is where I'm actually pegging our current resistance area is roughly at 1870, 1875. Support right now is very, very tentative. 1832 are these lows, but then I look again, just as we did over in this area where we looked at the body size and the bottoms of them, we can do the same for our current activity, which comes in roughly at 1849. So what we could see is the market test this particular area, bounce off this area, and right to about 1880, And if this area actually does become resistance, we would then go ahead and break that low. In other words, as much as I was convinced that we would see a very, very shallow and short-term rally, evidence and price action has proved to the opposite. And so as we reflect in this area, if we find support in this area and move up, we know what our specific actions are. But I do have to bring into alignment a couple of models that are looking at the real potential for lower prices. And that, of course, would happen if, in fact, this particular price point gets broken on a closing basis. We've got these series of lows in here. We have these series of lows in here and here. But if we're going by price action of the real body of the candle, because realize that's opening price and settlement price, and that's why that range is so important, where it closes in relation to where it opens, we could expect to possibly see some sort of ceiling at around 1880. And then if that was the case, we would, I believe, drift lower in the equities market. Lastly, I do want to take a look at crude oil. Crude oil continuing to decline, now below $29. My original target was 25. We came to 26. I believe at this point, now that we've seen a small little bounce in the market, you can see that on this weekly chart. I'll go ahead and blow that up, but in which the market came to about 26 and then traded as high as just above $34 a barrel, is now down at 27. First of all, if we break through 25, my new target is going to be 20. 25 holds. I would expect that area to be support. But as of right now, in terms of straight fundamentals in the market, it all weighs towards lower oil prices ahead. That, of course, has been what has been one of the issues that has been weighing upon Of course, the equities markets. The other one is concern in terms of the economic slowdown being experienced over in China. So those factors have really put a lot of haze in the market, fog in the market, and we'll have to see how that unfolds. But as I said, with oil down another 4% on the day, it could easily go again to challenge the most recent lows at $26. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update in trending markets. Bye-bye.